For those who are new here, we're now doing these calls on the last Thursday of every month, just so it better coincides with our monthly reports, which go at the end of each month. That way there's more of a retrospective to cap off the previous 30 days. And before I hand it off to the speakers today, a couple of quick governance metrics to point out. The first being the votable supply. At the start of the month, the votable supply was around 285 million tokens. Essentially, those are just the outstanding supply that's eligible to vote, either through self-delegations or receiving delegations from another user. And by the end of the March, that figure raised about 9%. So it's sitting at around 311 million today. Meaning there are more tokens out there basically to be used actively in governance. Theoretically, it could lead to a higher voter turnout. It all just depends on the distribution of that supply. And then the second metric is voter turnout. This month, there's been way fewer proposals than we're used to, 3 on-chain proposals so far. That said, quorum has been consistently met and exceeded, always by 2x or 3x. So still elevated turnout. That's great to see. And yeah, that's it for the metrics today. For the main agenda for the call, we're welcomed this month by Luke, contributor to Moonwell, super delegate, Coolhorsegirl, and the team over at Gauntlet. I think that's Mia and Andrew today. So yeah, Luke, I'll first hand it off to you. The floor is yours whenever you're ready.
Thanks for the intro. I wanted to just speak for a few minutes at the top of the governance call about all the hard work that different contributors across the Moonwell ecosystem have been putting in over the last few months. I know I posted a video update before the holidays about all the good work happening in the Moonwell community, but it's been a while since I posted a video update about Moonwell, and I just wanted to share some really important news about all the hard work everyone's been doing. We went away for a couple weeks around the holidays and then came back in early January, and launched a whole bunch of things that we've been working on for several months in the community. So, for example, just wanted to highlight a few of the big rocks that we lifted. Contributors at Solidity Labs actually created 2 new smart contract systems that have enabled us to have one of the most capital efficient money markets in the space today. And those 2 new features are OEV, or Oracle Extracted Value. And if you're interested in learning more about what OEV is and how it works, I would encourage you to watch. There was a post from Optimism where I gave a speech at ETH Denver just a few weeks ago with Sam McInvale from the Optimism Foundation, or OP Labs, and talked about what OEV is and how it enables builders on the superchain to basically capture sequencer fees that might normally go to the sequencer and redirect them to their app or to their users or protocol. And so now I'm happy to report that Solidity Labs finished the pilot OEV on Optimism mainnet in the WETH market, and then they've rolled out OEV price feeds to all of the other markets across both Base and Optimism, except for the staked ETH markets, which have a hybrid Oracle. So that means that now that we're actually capturing liquidations, we're seeing that MEV bots that liquidate underwater loans are actually paying sequencer fees to the protocol itself. And so that's actually a new source of revenue for the Moonwell protocol, which I believe we are the very first lending protocol in the space to do this on the superchain. And we were actually even a few days before Uniswap v4 launched. And Uniswap v4 is also implementing priority fees for one of their markets on Base as well, the WETH USDC market. So that was kind of cool to see that contributors at Moonwell actually beat some of the people, the gigabrains over at Uniswap Labs, people like Hayden Adams and Dan Robinson at Paradigm, and others that actually pretty much invented this concept of a MEV tax or sequencer fee redirection. So I thought that was really impressive that we have so much innovation happening where we're actually the first lending app to capture sequencer revenue and redirect it to the protocol as additional ETH that is just accumulating in the Ethereum market on Base and Optimism as reserves. And then we're actually able to implement that across most of the markets already. And I don't believe there's any other lending protocols on layer 2s that are doing this today. So there's some really strong innovation happening in the community. And if you want to learn more, I encourage you to just watch that talk. It's great. And other apps can take advantage of this same characteristic that the superchains has, basically. because it's a fair ordering sequencer. But I don't want to go into too many details because I have a lot to cover. The next topic is just really around reserve auctions. And so basically what reserves are in the Moonwell protocol is when the spread between borrowing and lending interest, lenders all often might make 6 or 7% lending their USDC out, but then borrowers might pay 8 or 9%. So that spread is captured in the protocol as reserves, and it normally just sits as extra liquidity that can satisfy withdrawals or borrows. But Moonwell contributors at Solidity Labs built a unique system that actually enables us to auction off these reserves in a decentralized way. And that went live about 2 months ago, I believe. And so we had the first reserve auctions last month, and those have actually increased the stake and reward rate on base for the safety module from 7% to 10%. And that just went into effect, I believe, just a couple weeks ago when the most recent reward automation proposal passed. And there's now a new auction that just went into effect a week ago Monday, so about a week and a half ago. And that's now auctioning off about $250,000 worth of Arrow reserves. These are, again, revenue that was captured in the Arrow market over the last several months. And we're working closely with Gauntlet to figure out what's the right ratio of reserves for each of those markets. So Gauntlet, as their risk manager role, is actually tuning the minimum reserves on a monthly basis so that that feeds into the decentralized governance proposal so that we can start to safely auction off more reserve assets. And so over time, you'll kind of see that will continue to drive more revenue into the protocol. And as we have things like OEV landing and the Morpho vaults are also contributing revenue. And then the excess revenue can be auctioned off to buy back well and reward all the stakers and those of you that are on this call that are participating in governance. So the general idea, I think this is another first for the Moonwell ecosystem. Even though other lending protocols are talking about doing this, we were actually innovative and first to actually redirect protocol revenue to reward governance participation and those that are backstopping the protocol through the shortfall insurance of the safety module. So another innovation. And then lastly, I just wanted to say that Moonwell contributors, we took most of the team to the hackathon. At Coinbase, you probably saw we won the grand prize for building Mamo, which is a yield-seeking agent that uses Moonwell markets and vaults. Mamo is going to be the best yield-seeking agent, the most secure on base on the superchain. And we won the first place in that hackathon on both the virtuals track. We won a $7,000 prize. And we also won the Coinbase track as well. We won the Coinbase grand prize of $3,000. So our team is super excited. And we actually decided after the hackathon, we're going to launch Mamo on base. And we're hard at work on that. And one of the cool things I wanted to mention, if you go to hack.virtuals.io, there's a new hackathon that has $100,000 total prizes to build AI agent collectives with this new protocol called Agent Commerce Protocol that Virtuals developed. Okay, so Agent Commerce Protocol is a way that agents can hire other agents. And there are two main focus areas for Virtuals, the team. We've been working closely with them. One of them is building an autonomous hedge fund. This is basically, think of it like a DAO formed of AI agents that all play a role, but it's basically a hedge fund for both crypto and traditional assets. And so I'm really proud to announce that Moonwell and Mamo team have actually joined that autonomous hedge fund. And we are there with AI XBT doing market analysis, and then AI XVC, which is a venture capital agent, is going to basically take orders from other agents and users and then invest them in Mamo or Moonwell strategies. So there will be low risk, medium risk, and high risk investments in this autonomous hedge fund. Low risk will go to the USDC strategy we developed with Mamo. If you want to learn more about this, I would encourage you to just go to my Twitter profile, and there's a pinned post where I just filmed a video a few days ago talking about how Agent Commerce Protocol is going to work. But we're really excited to be part of this, the first autonomous hedge fund that's formed of AI agents. And Mamo is going to drive a lot of new users, TVL, and USDC liquidity into the Moonwell markets and Morpho vaults. So really excited about all those things that are happening right now. And I just wanted to kind of like share some of the excitement and hard work that we've been doing in the Moonwell community. So I want to leave more time for the other contributors though to talk. So thank you so much for supporting us. And we're really excited about Mamo and hopefully winning this next wave of the hackathon with Agent Commerce Protocol. Thanks, everyone. Have a great day, and thank you for supporting Moonwell.
Great, Luke. Yeah, it's always great to get you on these calls. I know your schedule is pretty busy, so yeah, it's really appreciated. Up next, Coolhorsegirl, if you're ready.
Yeah. Hey guys. It's a tough follow-up from the very sweet hackathon wins. Congrats, guys. But yeah, I just wanted to pop in very quickly and cover the latest Security Council related proposal, and then a little bit of information about elections that are coming up just next month. So on Snapshot, there was a Moonwell Security Council replacement. Elliot Friedman departed from the Moonwell protocol, contributing to the Moonwell protocol. He's been replaced with Anna Bittencourt, a full-time Solidity engineer that's working with Lunar Labs. She's more than qualified to be a member of the Security Council. So that leaves the members right now as Anna, Gauntlet, Luke, X0 Soul, and then me. This term will only run for about another month here. So Anna's been rotated onto the Security Council. This is important in the meantime, of course, but then elections processes will happen next month, where anyone can submit to be a member of the Security Council, and voting will actually happen in May. So we've got about a month and a half until the Security Council gets rotated off, but it was important that we got Anna in there in the meantime. So we had a full stack on the Security Council to take action should anything arise. But yeah, I'm happy to discuss more about what the Moonwell DAO is looking for in governance. So feel free to always DM me about anything you're interested in or have questions on. Yeah, but that's me. Short and sweet. But yeah, it's good to see you guys all here. I'm happy to be a part of this.
Perfect. Thanks. Yep. Any questions? You can request to speak. And if not, we'll go over to Gauntlet. Andrew, whenever you're ready, we're going to go over the latest monthly recommendations. Just went up in the forums. So good.
Yep. Hey guys, Andrew here from Gauntlet, chatting about our monthly risk parameter recs, interest rate updates, supply cap changes, and minimum reserve threshold updates. Let's start with base. So we have some updated USDC IR curve recommendations here, mainly updating the multiplier from 0.0615 to 0.0565. All other IR curve parameters remain unchanged. Rationale here being that we've noticed that the Sky savings rate continues to lower. It went from 8.75% to 6.5%. So we're recommending lowering borrow APRs by about 50 basis points to remain competitive and encourage demand here. So if we look at projected borrow APRs, around the kink, it should be about 5%, which is down from 5.5%, and supply APR should be around 4.12%. So trying to balance, driving growth and also managing risk. We think this does a good job of doing that. We also looked at the WETH interest rates and don't recommend any changes here. Main rationale being that utilization remains below kink and the current rates are sufficient to balance both supply and borrow demand, but of course we'll continue to monitor demand here moving forward. Okay, looking at WETH, we also have an update on the reserve factor. We're recommending increasing it from 5 to 10% to align with what we have currently on Optimism. This change should have a minimal effect on the borrow and supply APR spread, but it should help, generate reserve accruals to absorb potential losses. So we think this strikes a good balance between generating revenue for the protocol and balancing a risk here. One more update on base is on the WETH supply cap. We recommend moving from about 2,800 to 4,000. So a little bit of a big update here, but the top three positions mainly account for 80% of the WETH supply, and it's usually recursive positions. So increasing the cap here allows for more growth while keeping buffers for future volatility. All right, so that's the main updates for base for this month. Moving over to Optimism. Here we have a recommendation for Velodrome, for Velo. We have two separate recommendations, one to reduce the CF from 65% to 63%, and then one for upping the supply cap from 42 million to 68 million. Context here is that while we're trying to slightly lower the CF to provide a larger liquidation buffer, we do think that having a higher supply cap supports continued growth. We think this combination mitigates risk while preserving lending efficiency. Velo remains a highly liquid asset on Optimism. And when we looked at what positions they're currently on Moonwell, I think there's around one that would be currently liquidatable if we update these CFs here. But we do note that Velo has gone up about 10 to 12% price wise from when we made our initial recommendation. So double check your positions on Optimism. I think the address was OXF6365E. So just want to note that here in case anyone currently has a position there using Velo. All right, for stablecoin comments, we have recommendations for USDC, USDT, and DAI. This mirrors our base rationale here. So we're decreasing the rate by 50 basis points to reflect the lower Sky savings rate and broader DeFi market conditions. So multipliers moving from 0.0615 to 0.0565. All other IR recommendation parameters remain the same. So it's very similar to what we're doing on base. We also looked at the WETH IR settings, and again, recommending no changes here. Currently maintaining levels that are look very good, but of course we'll continue to monitor conditions over the next few months. I think that wraps up Optimism. Moving over to Moonbeam, we have some recommendations to reduce cap recommendations due to the liquidity profile on Moonbeam slightly lowering. We kind of noticed a trend over the last few months where there's a huge gap in our current supply caps where it's not being filled by demand. So we want to reduce the caps to make sure that we keep markets highly utilized and making money for the protocol, but still leaving room for some consolidation in the markets. So we've got some recommendations on Wrapped Glimmer, moving down from 8 million to 6 million on supply cap side. The borrow cap side on USDC Wormhole 300K to 180K. XC USDC on the borrow cap side 300K to 240K. XC USDT 300K to 150K. XC DOT 110K to 75K. And then Frax 40K to 20K on the borrow side. No changes on wrapped Bitcoin, but we have another reduction in wrapped ETH from 15 to 10. So generally, we'll continue to monitor Moonbeam markets and make sure that risk profile looks adequate for the protocol. But noting that if there are potential changes, we'll note them in our monthly recs. Some other changes on Moonbeam, we've got collateral factor reductions on Wormhole USDC, Wormhole Bitcoin, and Wormhole ETH. These reductions help manage bridging risk and help maintain safety buffers for the protocol. We do want to note that if we reduce these collateral factors, there was about $4,000 in supplies and $500 in borrows that could potentially face liquidations. We've noted that in our monthly post in the Moonwell forum, so wanted to call it out here in case people have positions on Moonbeam. No updates for Moonriver this month. We think the risk and efficiency remain fairly balanced, so we're leaving things as is. And then I guess last thing is moving over to our minimum reserve thresholds. For the base markets, we're recommending moving down the value at risk multiplier from 20x to 10x. We continue to see the auctions for taking place and they look good. So we're updating our minimum thresholds to reflect that, and we'll continue to walk down those multipliers as we move from a more conservative to more aggressive stance. Same thing for Optimism. We're currently recommending moving down from 20x to 10x, and we will target some more reductions in the coming months. But main goal here is to maintain a prudent safety buffer that evolves with market volatility. But I think we've got some room here, which we're going to investigate walking down these multipliers one more time next month. So I think that covers everything from our March updates. If you have any questions, please feel free to DM us directly or me directly here on Twitter. Happy to answer them. Thanks, guys.
Awesome. Thank you, Andrew. If anyone in the audience has any questions, feel free to request to speak because we're approaching the conclusion here.
I actually want to give a couple more updates while we wait for people to come up and ask questions. I forgot to update. There's so much good news happening in the last few months. It's hard to keep track of it all. But I just wanted to mention there's a few things I forgot to mention. For example, we just launched with Cypher, Moonwell contributor, support for loading the card, the Moonwell card on OP mainnet. So that was a feature that just launched today. So now you can load your USDC from OP mainnet directly to the Moonwell card if you're an OP mainnet user. And then also I did want to mention that earlier this year, right before ETH Denver, we launched this new feature called virtual accounts, which was a really powerful feature that we were really excited to build last fall. We've been working closely with Bridge, the stablecoin Rails infrastructure company that's part of Stripe, to launch this feature. And basically what this allows you to do, I think many of you are already familiar with it, but it allows anyone in the world almost to get a US bank account. And then when you receive money in your US bank account, it automatically converts into USDC in your wallet on Base or OP mainnet. And this is a really powerful tool because it allows people that live outside the US, or even those of us that live inside the US or maybe are digital nomads, to get paid with a US bank account and end up with stablecoins in your wallet that you can immediately use in any app on Base. Whether you use Moonwell or not, that's really up to you, but we hope that you'll also deposit it into our vault because you can earn a yield there. And so we have that the flagship vault, USDC, on both Base and OP mainnet. And that's another update to give, is that we are the very first front end to support Morpho vaults and isolated markets on OP mainnet. This is due to the hard work of the Moonwell front end engineering team. We were able to be the first to launch a non-official front end for Morpho on OP mainnet. That took a lot of engineering effort, but thank you to the Morpho team for helping us out with some of the indexing. And I think the Morpho team does desire to have the official front end live on all of the layer 2s eventually. But for now, they're supporting just Base and Ethereum mainnet today. So we are the first. And I think what you'll see is that over the summer, that's going to continue to roll out across the super chain. And we have some really awesome things in the works there that I can share with you later. But I did want to give those updates. And the virtual accounts feature is really incredible. Another thing to mention is that normally there would be an on-ramping cost. It's about $5 per 1,000 to on-ramp USDC from your checking account to Base or OP mainnet. But the Optimism Foundation has generously offered to cover all of those on-ramping fees for users. So it's actually a free experience. And they're doing this because they want to increase stablecoin liquidity across the super chain. And so we're really proud to be partnering with the OP Foundation on making that a reality, that users can basically on-ramp USDC for free using a US bank account. I'm really excited about this because it allows basically remote workers, people that are digital nomads, to get paid by US companies and transact in stablecoins. And now with the card and the virtual account, you can kind of live your entire on-chain life from paycheck to payments in the Moonwell app with a passkey wallet on your phone or on your computer. And so we're really starting to see the Moonwell vision come to fruition there. And then just last thing to mention about Mamo before we get into the questions is that the Mamo agent, we just recently completed an audit of the smart contract system through Certora. That was Certora was hired to audit all the Mamo smart contracts before launch. And the reason why we did this is because we wanted to make it provably secure so that even the Mamo agent couldn't rug you. And you may have seen in the news recently that some of the AI agents have been tricked by people on X or people chatting with them into giving them funds. We want to make sure that could never happen. So I think when you see Mamo launch in a couple of weeks, hopefully you'll see that she's actually the most secure DeFi agent, and she can protect your USDC and other coins. And even herself won't be able to rug you if you because there's this fully audited smart contract system that no other DeFi agent in the world has today. So that we wanted to bring you the same safety and security you have on the Moonwell contract side to the AI agent space, because most of the AI agents out there right now are just a chatbot and a dev with a multisig, and that you're trusting them to kind of invest your coins. But we wanted to build a self-custodial solution because we want to make sure that you as a user or as an agent working with Mamo are the only one that can deposit or withdraw to your smart contract wallet, and that it's fully audited and you can trust her. So anyway, that's all my updates. I'm happy to answer questions if you guys have.
Yeah, thanks, Luke. Yeah, again, feel free to request to speak. If I see anything while I'm wrapping up, I'm more than happy to stop and let somebody chime in. So if not, we'll keep this call nice and concise here. As usual, the recording will go up on YouTube in the next couple of days, along with a written recap on the forums. And the next one will be on the last Thursday of next month. So I think that's the 24th of April. And yeah, if that's it, thanks everyone for joining. We'll keep this one short. Yeah, have a good rest of your week, rest of your month. Cheers.